Hello and welcome to Kitco Mining, a record quarter for Alamos Gold. I am Paul Harris, and joining me today is John McCluskey, President and CEO of Alamos Gold. John, welcome back to Kitco.
Pleasure to be here. Thanks, Paul.
Alamos reported a record quarter with production of 152,000 ounces, up 12% year on year and 9% from the June quarter. Record earnings as well, $84.5 million US. John, congratulations. How was the September quarter for you?
It was an excellent quarter. We knew revenues and earnings would be up by virtue of the fact that we had a great gold price going for us. We also closed the acquisition of Argonaut Gold, which brought in the Magino project, and that's going to be another sort of component to our growth going forward. So, yeah, it was a real breakaway quarter for us.
Now, with the Magino acquisition, one of the key things there, in addition from the production from Magino, it's right adjacent to your Island gold mine. When you announced the deal, you spoke of some of the synergies and the opportunities that pairing those two assets would allow. What work are you doing to deliver on that potential, and when do you expect to start seeing some of that potential come through?
Well, we're seeing the synergies right away. And the first important one being the fact that this year we would have been working on a tailings lift at Island Gold. That was roughly a $40 million budget, and we didn't have to do that. Secondly, we were also going to be working on the mill expansion for Island Gold. And by virtue of the fact that Magino comes with a 10,000 ton per day mill, it was fairly easy for us to determine during our due diligence that we could effectively integrate all the ore, process all the ore through the Magino mill, and that wasn't going to require the modification of our existing one. So that was a $50 million savings right away. There is some work to be done on the Magino facility. We could see that quite clearly going in, and that work is underway. Really, the first thing we had to do was replace the crushers. We've replaced the secondary. We're in the process of replacing the primary. Once we have that work completed, we're going to have about, and this is for the first quarter of next year, we'll have about 11,500 tons per day of capacity, and that will allow us to process the ore from both projects through the one mill.
Excellent. What about on the exploration side, John? Have you unified the geological models, the exploration models, and are you starting to see positive things from that?
There was a fair amount of drilling getting underway while we were going through the process of acquiring the company, and that drilling program is continuing. There is excellent potential to effectively expand the whole Magino pit. They had already defined a big inferred resource at depth below the pit floor as it was defined for the project that they were developing. We're doing drilling that will continue to upgrade those resources to reserves. There's also excellent potential to expand the pit to the east. Essentially, they were constrained by the boundary that existed between the Alamos ground and formerly the Argonaut ground. Now that boundary no longer exists. There's drilling underway that will see that pit expanded in the direction of what was formerly Alamos ground. It's very likely that that's going to continue to grow, and we know to some extent that'll happen because of some drilling that we had done a few years ago that indicated that there was sort of Webb-like stock style mineralization on our side of the boundary.
So will we see that at the end of the year when you update your resources and reserve statement?
I'm not sure how much of it's going to actually fall into next year's statement. Certainly, we're going to see a big growth jump by virtue of the drilling that we've been doing on the Island Gold side of things. Island Gold has grown every year that we've been drilling it. This year, we're also expecting the grade to actually go up again. That will be the third time the grade has increased since we've been exploring it. As we've been going to depth, the grade has been getting higher. So we're benefiting tremendously from that. But I think overall you're going to see, just based on the drilling that was underway even before we acquired it, I think you're going to see some growth in Magino.
Excellent. Now, as you said, Argonaut Gold, you closed the acquisition in July. And I think it'd be fair to say that since then you've been doing some financial house cleaning or cleanup, eliminating the hedge book you got with that, the term loan, revolving credit facility, and convertible debentures, if I'm not mistaken. Have you got your balance sheet back to where you like it to be?
Well, I mean, it's only been a couple of months that we've been on this, but as you know, Alamos likes to be debt free. We've got a small amount of debt but through the acquisition. I mean, that's just part of the cost of the acquisition. I mean, if you count the equity price, the debt component, and the hedge book component, the acquisitions didn't cost us much more than $550 million. It's still a real bargain when you think there was over $1 billion worth of infrastructure put into Magino, and we're benefiting from that. The hedge book is it's cleaned up as far as it made sense to clean it up. We took out the 24 and the 25 hedges. The contango on the 26 and 27 hedges, 6 months ago when we were looking at all this, contango was a little too wide for us to step in and retire the hedge book at that point. We would have been paying too big a premium to do it. So there are some hedges left, but relatively speaking, it'll amount to less than 10% of our production in 2026. So it's not something we're overly concerned about. There's also bound to be an opportunity, as gold rises and falls, as it typically does. There'll be opportunities to continue to pay down the remaining hedges. As far as the debt facility is concerned, they were paying over 12% on the outstanding debt. It was around $250 million, and we've effectively reduced that to 7% by simply replacing the debt facilities that were outstanding with the credit facility that Alamos already had in place. We're getting much better terms, and so we were able to reduce the debt quite substantially. The interest rates on the debt, and going forward, it's just a question of time as we're generating cash flows from operations that we'll continue to pay the debt until it's gone altogether.
Excellent. Now, your all-in sustaining costs were up 30% in the September quarter compared to the June quarter, but still at a very healthy $1,425 per ounce. How much of that increase was related to the Argonaut acquisition, unwinding Argonaut's balance sheet and things of that nature? How much of that was just sort of general increase in the cost of doing business?
Yeah, that was virtually all of it. There was, the closing of the transaction. When we acquired Argonaut, they were in pretty dire financial circumstances. We effectively had to pay off the outstanding liabilities that had been accruing. It sort of all comes in that quarter, and that the accountants they like to call it a noisy quarter, and we're through all that now. Most of those things were one-offs. And we also we had to shut down the mill for quite a number of weeks just to deal with the repair work that was needed, particularly on the crushers. and we didn't really get things up and running again until the last month of the quarter. So I think the cost, if you were just to look at the cost of the limited number of ounces we produced at Magino, given that most of the work going on was sort of remedial work, I think the cost came in at something like $3,000 an ounce. Well, those are going to decline dramatically as we get the whole facility operating in an efficient way and integrating it all with the Island Gold project.
So will your all-in sustaining costs come back down towards that $1,100, $1,200 US dollars per ounce in this quarter?
They're going to continue to decline. I can't tell you the precise dollar amount we're going to hit quarter on quarter, but effectively our costs are going to come back down to about $1,100 an ounce again, and that will be predicated on having the Magino operation operating in an efficient manner, and the integration that we're doing with the Island Gold project. We're effectively going, from an accounting perspective, we're going to effectively just include those two mines under one roof, similar to what we do in Mexico, where we've often had two or sometimes even three pits going at once. And we just always refer to it as mulattoes, and we just took one production number and one cost number. We'll do the same thing at Island Gold.
Now, Alamos Gold, you're producing on a run rate of sort of 500,000 ounces per year, give or take. What's next for the company? Pushing on towards that 1 million ounce per year of production?
Yeah, with the acquisition of Magino, we're closer to 600,000 ounces a year. We started the year at that 500,000 ounce threshold, but Magino, for the time being, its nameplate should be about 100,000 ounces a year of annual production. So that's what we're looking forward to in 2025. But there's a number of things that are unfolding. First of all, the Island Gold expansion will take underground operations up to about 300,000 ounces a year. So we'll be getting about 400,000 ounces a year from the Island Gold side of things in 2025. And then add to that what we'll be doing at Mulatos and Young-Davidson and so forth. We'll be at about a 600,000 ounce a year run rate next year. But as the Island Gold expansion is completed in 26, that'll push it to 700,000 ounces a year. And then when we add Lynn Lake, which we'll make a construction decision on next year, that will push production to about 900,000 ounces a year. So there's pretty steady growth coming in the few years ahead. That's just looking ahead to about 2028.
Now, with Lynn Lake, John, you put out a feasibility study on that last year, 2023, and if I remember correctly, that had an internal rate of return of about 22%. What is it you're looking to see before you make that investment decision, or where do you want to get the project to? What work are you doing before you make that investment decision?
Yeah, there's a couple of things that we've been working on. One is we're completing all the detailed engineering. That'll be 100% complete in Q1 of next year. Secondly, we have to file the mine closure plan, and with that last step, we're in a position to effectively make a construction decision on the project. So as far as the economics go, the IRR was based on quite a bit of a lower gold price assumption. It might have been like $1,400 gold. If you were to factor in $2,000 gold or something like that, the IRR goes well above the 25% level. I think we're over 30% actually. So we're quite comfortable with the economics of Lynn Lake. We're going to, with the completion of the detailed engineering, we'll have pinned down the capital budget very accurately. So we'll be able to provide some realistic guidance on that. And I don't doubt that the project is going to go forward. In fact, on top of all that, we've been drilling off the burnt timber and linkwood deposits. Those were two additional deposits that were sitting in the inferred category, and we didn't include those in the initial feasibility study. But we've had the time now to drill them and do some additional work on them, and we'll add that to the overall Lynn Lake project, and I expect that's going to add at least another 800,000 ounces or so, and that will bolster the project even further.
Well, John, it's great to hear that there's a lot more success coming up for Alamos Gold around the corner. Thank you very much for joining us today.
It's been a pleasure. Thank you, Paul.
And don't forget, if you like what you see, please hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.